The following program of the staff,
but if I can learn
management, or
something,
ownership of this station.
I'm always like,
It's time to get on the right path with Right Path Real Estate Radio with Jason Bible. Get the answer to your question that's keeping you from taking action and succeeding.
Are we on Facebook?
Yeah, we're on Facebook.
Sure.
Okay. Oh, there we go.
Get ready. The guide that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Jason Bible.
Welcome to the show. Welcome to the show, Jason Bible, Right Path Real Estate. I'm here with Darel, Daik of Noble Mortgage. What's going on, man?
Good morning, my friend. How are you?
We all made it to the office this morning. It's bedlam here in Houston. It's raining and everyone's freaking out.
Yes. Every time, right?
Yeah.
Every time.
If it rains consistently, it's not a bad deal. But if it doesn't rain for like a couple of weeks and then it rains, everyone's like, "Wait a minute, how do you drive in the rain?"
Yeah, dire straits.
That's right.
Dire straits every time. Yeah, unfortunate, but we need the rain. It hadn't rained in a while.
Yeah, it hadn't, which is kind of weird for down here. So money. Where do we get money from? The magic money tree, or we get it from Noble Mortgage?
Just go to noblemoney.com.
Noblemoney.com.
Because our money is noble.
That's right. I love it. So, weekend retreat was this weekend. You came out and spoke to everybody. And I'll tell you what, the buzz was all about 80% LTV for landlords. Maybe you could explain a little bit more about that, what that is, what's changed in the last couple of months, and that sort of thing.
Sure. Yeah. So we're excited about it. Actually, we haven't even really officially, sent out a flyer or email to everybody.
Was that
no, we're fine. We just have the flyer ready yet.
Yeah. Oh. So Erica's working at the office.
Yes,
right now.
Erica, if you're listening, get the flyer ready. So typically what we do on our rehab to perm program is we'll lend up to 75% of the after repaired value, so the future value of the property, so it starts off with a hard money loan and then it rolls into a long-term permanent loan into a conventional. And so that's a great loan program. You can get up to 100% financing, and then we immediately refinance you into a conventional, which is also a 75% loan. So we match the LTVs because we don't want to do an 80 and then you got to put down 5 later. Anyway, so recently Fannie Mae changed their rate and term refinance standard from 75 to 80.
That's huge.
It's huge. It's really huge. So now we're going to bump our hard money on a case-by-case basis. I mean, they have to have certain credit and liquidity and so forth to qualify for it, but we're going to do up to an 80% hard money loan as long as they qualify for a conventional. It has to be a conventional, not a portfolio, so they have to have less than 10 properties, qualify for that conventional Fannie Mae loan, and then immediately refinance it into a conventional loan. So it's a great program. We should extra 5%. When you compare that to a flip, you're getting 70. So now it's 10% over that.
Yeah. All right. So for new investors, so you're going out and buying a house. Let's say ARV $100,000, right? So until this rule change, max you could borrow was $75,000, right? 75% loan to value
on a hard money loan.
On a hard money loan, right? So $75,000. Now that they've changed that to 80%, you can borrow up to $80,000. So that additional $5,000, if you bought a house at 80%, came out of your back pocket, right? Came out of Hip National.
That's correct.
Now you're able to put that into that long-term Fannie Mae 30-year fixed-rate mortgage, like the sexiest money out there, right?
Yep.
And the reason it's sexy is because it's cheap.
It's cheap, and you never have to mess with it again.
That's right, yeah.
30-year fix, just pay your mortgage, and they'll never call you.
Yeah, just keep sending the payments in, right?
Yeah.
Which really, at the end of the day, are you really paying that mortgage, or are your tenants paying the mortgage?
Well,
really?
if you're a good landlord, your tenants are paying.
That's right.
Right?
Yeah, tenants are really paying the mortgage, and you're just making a little bit on the spread. So that's a big deal. So what you said, there's some credit and liquidity. What are the kind of caveats for an 80% product?
So we're looking for at least typically about a 700 credit score. And then depending on how many properties they own, the liquidity requirements come in.
Okay.
So, at 4 properties and at 6 properties and beyond, then we look at certain, liquidity requirements. And also, it kind of depends. We look at it more of a big picture. Fannie Mae has their own requirements, and then we also have requirements. We want to make sure that they're successful. And if they, they lose a couple tenants, like we have a big storm. A lot of people that got in trouble during Hurricane Ike. They had this big storm. You lost, 5 out of 10 tenants, some people can't last a month.
Yeah,
because they don't have liquidity.
That's right.
And so those are the things you gotta think about. When everything's going great, everybody's making money.
Right.
Nobody thinks about these things. Well, me being the lender, I think about these things because I've seen them. Right. So when Hurricane Ike hit, we had a lot of people that just couldn't make payments. And that's that's where liquidity comes in. So what I always say is, even if we give you 100% financing, you still have to have liquidity.
Yeah, you got to have some. You still got to make the payments.
So to make the payments, you got to have that money in case something goes wrong. I was going to say something derogatory, but I realized on the radio.
Yeah,
that crap money.
Yeah. Oops, oops money.
Yeah, the oops money. Yeah. So you always have to have liquidity. Give your contractors money. Make your loan payments. Yep. Maybe it takes you a little bit longer. Maybe there's a cost overrun on the project. I mean,
Yeah. Well,
there's 1,000 reasons why you need liquidity.
Oh, exactly. Well, it's kind of like when someone says, "Oh yeah, you can get into real estate with no money or no credit." It's like, not really.
Yeah.
It's kind of like, we don't really. I realized this weekend during the weekend retreat. We don't really teach real estate. We teach how to run a business, right?
Yep.
And when someone says, "Oh, you can do real estate with no money or no credit," I'm like, I mean, can you? Sure. But it's kind of like saying, "Oh, I'm going to open a restaurant with no money or no credit." Yeah, that's not really going to work.
Yeah.
So let's just be honest about it. You got to have some money. You got to have some credit, right?
Unless you have a lot of partners.
Yeah, unless you got a lot of partners, right?
But then they're doing the money and credit for you.
Somebody around you's got to have some money and some credit, right?
Yes.
And I'm. This is going to probably be a little derogatory. Somebody has to be an adult, right? Somebody's got to have some money. Somebody's got some credit. One of the things I talked a little bit about this weekend, in that most people are on a relatively fixed income, right? There's very few people that are 100% commission. They're salespeople, and that's kind of a different deal. But most people know what they're going to make month over month, right? And so when your personal finances are really just structured in such a way that you don't spend more than you make. So you're just managing expenses, right? But when you get into business, what happens? Your income can vary, right?
Of course.
You got good months and then you got bad months. So now you've got two things you've got to manage: income and expenses. And one of the things I've always said is, if you got bad credit, no money, all you're having to do is manage the expense side. And then when you get into business, you have to manage the income and the expense side, both personal and business. And it's like, let's get good at, kind of like the old Dave Ramsey principle. Let's get good at putting dollars in envelopes and managing our expenses. Once you get that figured out, then we can go into real estate. But before that, let's not just jump into real estate with no money or no credit. Let's fix the no money, no credit problem. Then we can kind of do the real estate thing. But in any case, that's just one. And I would imagine, too, you see a lot of personal financial statements and that sort of thing. And I'm willing to bet there's a correlation between someone who's got good money and credit and the level of success they have in real estate.
Yeah, absolutely. And another thing that on that same point, Jason, is a lot of people when they start a business, they treat their business like it's just their personal checking account or their personal financials and so forth. And, that's a separate living being, a business is.
Yep.
I don't care if you're the 100% owner or not. You have yourself personally and you have the business. And the business needs to drink, needs to eat, it has expense. And it's its own entity. And a lot of people don't run it that way. I think that's where a lot of people get into trouble is they just use it like their personal checking account. Hey, there's money in the account. I'm going to take some out. And right?
Yeah, it's just, and then when you start hiring employees,
yes,
right, you're responsible for making sure they eat.
Yes,
I mean that's kind of a humbling experience.
It's kind of a big deal if they don't get their paychecks.
It is kind of a big deal, right? Yeah, they kind of they prefer to get paid.
Yes,
at least the ones here in our office do.
Yeah, we don't want to revolt.
Yeah, that's right.
You come back and they got pitchforks and
you're like, hey, what's going on, guys? There's no money in the checking account.
They're burning all the files.
That's right. 2 minutes. Yeah, your best employees are torching the place.
Yeah.
So how do they get in contact with you to talk more about this 80% product you guys got?
Sure. Well, the best thing, go to our website at noblemoney.com, or they can call us at 713-680-8100, or in Dallas, we have a Dallas office now, 214-492-0100.
And this works here in Houston and in Dallas, right?
Houston and Dallas, San Antonio, Austin.
Okay, so all the major markets. If you guys can get a couple of comps, then I'm sure you can finance the deal. My assumption.
Yeah.
Yeah.
And that's the other part. It needs to be a clean neighborhood where we know we have good comps and so forth.
Yeah.
You know, if it's some property in Crosby where the closest comp is 5 miles away.
Yeah. Yeah, here's my 10-acre tract with my rental property on it. There's nothing comparable within 6 miles. It's like, well, I'm not sure we can do that one.
Yeah, that's the thing you got to look at on the permanent side because they're, they want cookie cutter deals.
Yeah.
Easy deals.
Yeah. And those are the ones you ought to be investing in anyway.
Exactly.
We always get the question, typically folks that go to our weekend retreat are folks that have looked at some real estate deals and they're like, Jason, what would you do with a 25-acre tract north of Magnolia? And I'm like, nothing. I mean, Houston house buyers, we buy houses in Houston in little suburban neighborhoods like the cookie cutter 322 brick. I mean, it makes your life a lot easier when you try and figure out what the value is and then if you're going to rent it or sell it if there's a whole bunch of other like-kind assets in the area.
Oh, yeah, big time, yeah. When you start chasing those weird deals and they're hard to, and they're time-consuming.
Oh, yeah.
By the time someone figures out what to do with that 25-acre tract, you've already bought 10 houses.
Yeah, exactly. That's what I explained to them. I'm like, while you're going around goofing around with that, we're doing 6 or 7 more houses, right? It's just like, just do one thing and do really well at it. So, all right, we get back from the break. We're going to talk more with Darel Daik of Noble Mortgage. We're going to talk a little bit about buy and hold properties and some flip properties and how to get those things financed. It's Jason Bible, Right Path Real Estate.
Mike's off.
You mean the employees preferred to get paid? That's weird.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
Investor loans offering up to 100% financing are still available. You just have to know where to look. Look no further than Noble Mortgage. Noble Mortgage is a full-service mortgage company that's been helping investors since 2003. Noble Mortgage offers up to 100% financing to investors that covers purchase, repairs, and closing costs. In addition to private money, Noble Mortgage offers conventional loans, FHA, and even no-income documentation loans for both residential and commercial properties. Call and ask about our 5-point guarantee, which includes free pre-qualifications within 2 business days. Call 713-680-8100 or visit noblemoney.com. That's noblemoney.com. Our team has over 50 years experience in the mortgage industry. Call us today, 713-680-8100, or visit us on the web, noblemoney.com, noblemoney.com.
NMLS 292143, 8203 Willow Place Drive, Houston, Texas, 77070.
If you have cracks in your walls,
We got
ceilings,
2
or
minutes,
floors,
guys.
you may have a foundation leveling problem. Do you have doors that stick or just won't open right? Maybe you have gaps in the bricks of your fireplace. You need Green Tree Foundation Leveling, a fast, high-quality foundation leveling company based here in Houston. They know how hot it gets on the Gulf Coast. High summer temperatures, heavy rainfall, and clay-rich soils are leading causes of foundation cracks. If you have a cracked slab or a shifting foundation, call Green Tree Foundation Leveling at 832-329-1687. How old is your house? Many older homes in our area require foundation repair simply because of our climate and soil conditions. Green Tree Foundation Leveling provides free estimates within 24 hours. They repair concrete slab foundations and pier and beam homes too. The experts at Green Tree Foundation Leveling work fast and offer competitive rates, even a lifetime transferable warranty. Call 832-329-1687 to schedule an appointment with Green Tree Foundation
Jason?
Leveling.
Are you an active real estate investor? If so, a real estate attorney is a crucial member to add to your team. Contact Ehlert Law at 346-231-1120. Ehlert Law serves clients in real estate and business law with principal offices in Houston and their acquisitions and dispositions. We are equipped to serve you in your residential and commercial real estate law needs. Contact Ehlert Law at 346-231-1120. We draft and review docs and
30
structured
seconds, Jay.
transactions and represent
So if you
you
want to
in
go
disputes and
Thursday, I'll be up
litigation.
there on the
Or
25th.
choose one of our transaction
And we're
packages
doing them
to
at
cover
the
your
hotel,
sub-tier, wholesale,
Wyndham Hotel.
wraps,
We
or
did the
private
event at.
financing
One last
deals.
time.
Yeah.
Our business and
I
commercial
got something
services
going on.
include
Okay.
business
We're
contracts,
just going to do them there
entity
from now on.
formations, and business
Quest
consultations.
office is okay, but
If you
since
need
we
a
do our
reliable,
right path
dedicated
events there,
firm to
figured
serve on your
have it at
team,
the same
contact
hotel.
Ehlert Law
Is it
at
3 days this weekend?
346-231-1120.
No, it's not 3. It's just the
Just the
Thursday
event.
night.
Okay,
Yeah.
gotcha.
231-1120.
And we're kind of
Paid for by
debating
Darel
back and
Ehlert,
forth. Do
principal
we take
offices in
that to
Houston,
a
not board
monthly
certified by the
thing,
Texas
or-
Board of Legal Specialization.
We haven't. We're always tinkering with stuff. So.
Yeah, every 2 weeks. Y'all do what, 2 in Houston? 2? That's a lot.
Yeah, every week.
All right,
we're
fellas.
in one of the markets.
All right, guys, stand by. Hot mics in 5, 4, 3, 2, 1.
Welcome back. Jason Bible, Right Path Real Estate. I'm here with Darel Daik of Noble Mortgage. We're talking about something that's super exciting for you landlords out there, where you could previously leverage up to 75% loan to value. Daryl's got some changes here with Fannie Mae that will take those limits up to 80%, which on a $100,000 loan's $5,000.
Yep.
I mean, that's a little bit of money when you do 20 properties, say 10 in your name and 10 in your spouse's name. That's $100,000.
And most people that are buying rentals are buying at about 80 to maybe even 85% of ARV, wouldn't you think? I mean, if that's what the wholesalers are selling.
Oh,
at.
yeah.
I
It's
mean,
80, 85% all day long.
Yeah, because those deals are hard to find. You know, those 3.2s and Katy.
Yep.
You're not picking them up for 60 cents on ARV or even 70, 75%. They're going to 85 cents on the dollar if it's a good rental.
Yep, absolutely. Good rentals, good market. I know we sold one, and I have no idea. I didn't ask any questions. They said they wanted it at that price. They bought it at 105%. And I was like, okay, well, if you do the work yourself, maybe you'll save some money. But I think it was one of these landlords that already has a couple dozen in that neighborhood.
Sure.
They don't care. They buy them and keep them forever. So they said, hey, why not? I'll take this one. So landlords are kind of funny creatures.
Yeah.
Sometimes what they pay for stuff just blows me away. But I mean, I get it. If you're in our seminar on the weekend, we call it the Homer landlord.
Yeah.
And the Homer landlord is that guy or gal that buys rental properties in the neighborhood in which they live.
Yeah.
So, which I get. I mean, price really doesn't matter to them because they can walk out the front door and lease
It
their
does make
property.
sense on a certain level. You know, if you know the neighborhood. It's easy to manage. You walk around like the big man.
That's
know?
right. That's the analogy I give. They want to be the Trump of Atascocita Shores or something.
Yeah.
And they walk around at the HOA meetings like a big dog. Right?
Yeah, exactly. When the third of the month comes around, you just walk around with the bat in your hand.
Which is funny because most of the people I know that live. The neighborhoods are really nice, right?
Yeah.
I mean, they're buying houses and but it is literally a pick your neighbor program.
Yeah, that's true. Yeah, you probably want to see, probably want to go out drinking with them one night, just to kind of see how they are.
Yeah, like, I want to get to know you because I live 3 doors down and you're renting my house.
Yeah, and I throw a big party every year, and I want to know how this is going to end up.
Yeah, exactly. Oh, that's funny. Yeah, and you're invited, but I just want to make sure this is cool. Right?
Yeah, see if you can hang.
Yeah,
yeah, we see those all the time. We've done several deals on a hard money basis where they're in at 100% of cost. Mm-hmm. And what I always tell my loan officers is, we don't get in the business of telling people what a good deal is.
Right.
That's just not our business.
Yeah.
Because a good deal to you and a good deal to this guy and a good deal, they're 3 different things, right? And so if it makes sense for someone, and they can get cash flow out of it, this is a guy who's making nothing in his checking account or his savings account. And he's taking 20, 30 grand out, putting it into a rental. Now he's got $300-400 coming in a month. That makes sense to him.
Yeah.
Even if he is in at 100%, he's immediately making money on it. So we don't ever get into that.
I don't.
Let the gurus handle that.
Yeah, let the gurus do that, right? Well, when we sit down with our folks, I rarely say, hey, do this or that, right? Sit down and say, hey, why don't you gather all the information and let's talk about, situation A, B, C, and D. We only get into the hey, don't do this if we know that they're headed for the rocks, right? I mean, they're, depending on what choice they pick, maybe the waves get a little rough, but we keep them from running aground. That's really our job. So I never get in a situation where I tell one of our mastermind folks, no, you've got to do this, or this is a good deal or this is not. Usually we'll sit back and say, okay, just be aware. Here are the risks associated with doing it the way that you want to do it. Does that kind of make sense?
Yeah.
Because I don't want to get in the same situation either. It may be a great deal for them. It's not something we would do, but it's a great deal for them. So the only time we do get really involved, we're like, don't do that.
Yeah.
You don't know why you're about to lose a lot of money, but I'm telling you, you do this one thing, it's going to completely screw that deal up.
Yeah.
So,
Well, there's 100 different ways to make money in real estate, and some people have little niches, they do mobile home parks or, whatever they do. And I'm like, yeah, that's great. And I'm sure you can make a lot of money. We don't lend on that kind of thing, but I'm sure you can make, and like these guys picking up these $30,000, $40,000 houses.
Yeah.
We don't lend on those.
No.
It's just not it just doesn't make sense for us, those little deals. But I'm sure you probably make really good money.
Oh, yeah. Oh.
Now, it's a high level of management required for those little $30,000, $40,000 houses. We get a lot of those in Beaumont. We get people calling us left and right on Beaumont. That's when I know the market's getting a little out of hand.
Yeah.
Because they're like, Houston, their deals aren't quite where they were. Hey, Beaumont. I mean, I've seen this every cycle.
Yeah.
Hey, look at all these great deals in Beaumont. They're worth $30,000, $40,000, but I'm getting $800 rent. And I'm always like, yeah, but it's in Beaumont.
Yeah. I'll tell you, you let out a little secret. Beaumont is real hot right now.
Yeah.
It is real hot. But like you said, it's these little $30,000, $40,000 deals. And what a lot of people don't understand about renting, because they'll rent for $800 a month, right? And if you get a note, $40,000 note, PITI, whole shoot match, you're probably in for $400, right?
Yeah.
A month. So you're cash flowing $450 a month. Now, what a lot of people miss on those lower end properties is that they never appreciate.
Exactly. It's strictly cash flow.
It's strictly cash flow.
You're buying a cash flow.
So what you're really doing, and when I ask people about cash flow calculations on those deals in particular, is, hey, what are you expensing, or what are you accruing every month for CapEx, right? Because a roof's going to have to get replaced. HVAC's going to have to get replaced in service. I mean, all these, you own these, you've owned rental properties, right?
Sure.
So you own these things long enough, they're all going to need some capital expenditures at some point to fix the property and take it back up to new standards. Well, that's in nice areas of town. They naturally appreciate, right? So you got another $20,000, $30,000 in equity because you've held it for 6 or 7 years. No problem. We just take it out of the equity and put on a new roof. Well, in these houses that never appreciate, but they have all this monster cash flow, I'm willing to bet half to a third of that cash flow should be retained for future capital expenditures, putting on the roof, fixing the air conditioner, put a new air conditioner in, foundation issue, plumbing, whatever, right? And I think a lot of these guys, these traveling gurus will tell you, yeah, go buy the $40,000 house that cash flows, $500 a month. And it's like, whoa, cowboy. That's not all cash flow. You can't eat all that cash flow, right? You need to put some back so you can get the house fixed.
And those tenants, these aren't tenants that are staying typically 3-4 years.
No.
Sometimes you may get 6, 7, 8 months out of them. Sometimes you may get a year or two. But and they're harder typically on your property. So yeah, you do have to have money for all that kind of stuff. But with me, it comes down to financing. What kind of financing can you get on a $30,000 house?
Yeah, you can't.
I'm not going to lend on it.
Yeah.
A lot of banks won't lend on it because they don't want those, they want curb appeal.
Yeah.
They want to be able to look in their portfolio and go, we got a loan on this house. Look how nice it is. Not this $30,000, $40,000. Yeah. So we get calls all the time. I'm like, I don't know where to, we don't lend on it. First of all, I don't even know where to tell you to go on something like that. So then your financing gets more expensive because there's just not a lot of lenders that will do that.
Well, the conversation I've had with a lot of lenders is, and it's the fees associated with like a Fannie Mae product. It doesn't make sense when you start doing this really low end stuff. I mean, I'm sure you guys what's the low number over at Noble, like the smallest balance that you could be willing to carry on a property like that?
Typically $50,000 loan.
Yeah.
We want the house to be worth at least 75 or 80.
Yeah. And one of the things, and we talked about this weekend, there's really 3 markets in a real estate market. The below $75,000 stuff, at least in Houston, that's the number in Houston. And Dallas is probably pretty similar. But the below $75,000, I mean, it's just not a market you really want to be in. It's not the young guy or gal just graduated from SMU or A&M who's going into their first job as a corporate attorney or oil. They're not renting those properties, right?
Yeah.
I mean, it's a whole different crowd. It's a whole, like you said, it's a whole different management structure. So the stuff below 75 was always said, just owner finance, right? Get a private loan and just owner finance them. The sweet spot for rentals, we think 75 to 150.
Yeah.
That's really kind of up to maybe $175,000.
Yeah, I agree.
What a lot of landlords are experiencing now, who bought 4, 5, 6 years ago, is properties have appreciated so much that taxes and insurance are starting to eat in that cash flow.
Yeah, especially taxes. Which, speaking of, this month is the last month.
Do you like that transition?
That was a good
like
transition. This is the last month. This is the last month to protest your taxes.
I heard.
And just in case you need to learn about this, we have an event tomorrow.
What?
What?
Y'all have an event tomorrow?
It's like
on
I told you to say
protesting taxes?
this.
Yeah.
Yeah, we have an event tomorrow, our Basics and Breakfast, our world famous Basics and Breakfast
right.
event.
That's a fun event.
It is. I love that event.
Yeah.
I love that event. It's over at Canopy on Montrose. I'll speak for an hour on financing. And then a good friend of mine, David Nettles, who does property tax protests, will be speaking on how to protest your taxes. Of course, he does that for a living, but he's also going to show you how to do it yourself. I used to do it myself.
I don't know.
Now I just get someone to do it. It's painful. It's an insider's game.
Oh, it totally is.
Like, he goes in there, he knows everybody. You know what I mean?
Yeah.
And they're just going to work a deal out with them just because they know he's got 1,000 other ones right behind it. Right?
Yeah.
I walk in, they're like, who's this chump?
Yeah, who's this guy?
Let's make him miserable.
That's right. They're sitting to each other like, all right, let's try this on him.
Yeah, it's horrible.
It's pretty funny. I got a friend of mine lives out in West U, and she sends me this text message. She goes, I'm going out to protest my taxes. I'm like, what are you doing? So she gets done, and of course she lost miserably. And she said, I said, and she bought her house maybe 10 years ago. So I said, are your taxes more than your mortgage? And she said they're almost the same at this point.
Wow.
Yeah. Well, that area of town's just gone.
Where's she at again?
West U.
Oh, yeah.
So it just skyrocketed over there. And she's like, yeah, they're about the same.
That's insane.
Isn't it wild?
Yeah. But you can still protest them, even if maybe you look at it and you think, I don't think I can get my value down. Sometimes you can get it down.
Yeah. Actually, speaking of that, I need to send him 2 properties because I've got 2 right now that we ought to protest. We're going to end up holding on to them long term, and we bought them for basically nothing.
Yeah.
So actually, we ought to have him on the radio show talk a little bit about that process.
You should. Y'all have a tax protest guy that does on your sponsor?
That's not a radio show sponsor. We've got a couple that are on our vendor program.
Okay, gotcha.
Because I find that always fascinating. Because like you said, it is kind of a little insider deal, right?
It is big time.
Yeah, and
big time.
And to hear how that whole process is done, and then you think, oh, I'm just going to go do it myself. It's like, it's like managing your own rehabs, right?
Yeah.
Like we'll teach you how to do it, and then at the end of the seminar, we go, just go to Fast Track, right? I mean, it's like we do. We've got an app, right, that we can manage rehabs with, and we'll teach people how to, or not manage rehabs, but to estimate a rehab. It's like you do this and this. Look, man, just download the app. It's a couple $100. It'll be one of the best deals in real estate.
Yeah.
Just walk the property and put in answer the questions, and boom, there's your number. It's that simple.
Yeah,
right?
I keep forgetting about that app. I need to check that out.
Man, it's cool. It is super cool. So we'll talk a little bit about Basics and Breakfast again as we're going into the break. How do they sign up for that event?
Just go to noblemoney.com. They can sign up there or shoot us an email at info@noblemoney.com. And it's a free event. Starts at 9 o'clock tomorrow morning.
Perfect. All right. When we get back from the break, we're going to talk more with Darel Daik of Noble Mortgage.
Mic's off, guys.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals.
Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
They had this look on their face like, this guy's getting ready to pull out his jammy.
Virtuoso Graphics is not your ordinary sign shop. We're your one-stop shop for all your signage and graphics needs. We are located in the Galleria area and have been in business for over 13 years. We offer a wide variety of signage products, including Bandit, aluminum, and ADA compliant signs to 3D
Hey,
letters.
fellas.
Need something printed? We can get that
Hey,
done
gentlemen.
too. From outdoor banners to business cards and anything in between. Take advantage of our laser engraving services. We can custom engrave on many products available through our catalogs or your own personal items. From large orders to small, we can accommodate your specific needs. We pride ourselves on customer service and work one-on-one with customers to make sure they get a good quality product. Come view our showroom to browse our many samples to get you inspired. Want your business to get noticed? Give us a call at 713-623-4425 or visit our website at virtuoso-graphics.com.
Yeah, 1 minute,
1
fellas.
minute, okay.
We found her inherited a great investment property.
I thought you said one man. I'm like, who's one man?
Or more importantly, what to do to
Let me show you these
maximize your
pictures.
investment
Summer,
while mitigating risk.
Summer goes down
This is
there
exactly why we started Next Gen Appraisal.
every weekend. I
Next Gen
think
is
she's got a
group of
friend that
appraisers
lives
specializing in investment real estate.
lives right
We
down the street
understand
from
that
there.
investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen
Yeah,
a
so
call
we just
at
got the
713-346-9911
siding done, and it would have been
or check
painted,
us
but
out online
they've got to
at
do they got to do a windstorm
nextgenappraisals.com.
inspection.
Investor
What
Loan
beach is it on?
is Houston's
It's,
premier investor loan company. Our
30
products
seconds.
and approval process are unique in the Houston marketplace. First of all, we loan based on the asset alone. That means
Is
no
it beachfront
credit
or is it
minimums,
like
no
one back,
income
or-
requirements,
No,
and
it's
no
right across the
reserve
street.
minimums.
The beach is across
Second,
the street.
we
We've got a
have
little highway
short-term
there,
loans for
Yeah.
fix
and
and
then
flips,
the bay is on
and
the
several
other side.
long-term options
What are y'all gonna
for
do with it?
rental
Y'all keeping
properties.
Yeah, we're
Since
gonna
we're
keep it just in the
asset-based
company,
lenders,
and we're just
everyone
gonna use it
is
whenever.
approved.
Be a
Check
good
out
little retreat
Investor
deal.
Loan Source
Yeah,
at
that's what we'll do.
ils.cash. That's
We did white with
ils.cash.
a light green, then it'll be a darker green outside.
This
Oh,
is
cool.
All
Business
right, guys, stand
1110.
by.
Yeah, it's just like a little corporate retreat for us.
All right, gentlemen. Hot mics in 5, 4, 3, 2, 1.
Welcome back. Jason Bible, Right Path Real Estate. Man, I'm embarrassed. I didn't even give out the phone number. People probably want to call and talk about this.
You're probably in a
80%
daze after this weekend.
I am in a daze. Monday is kind of tough after the
Yeah,
weekend retreat.
I can
right?
imagine.
I went and got a massage right after the event because speaking when you're you almost lost your voice on
I did lose
Saturday,
my
yeah.
voice. Yeah, I was struggling. I had to speak, I think 5 times last week.
Wow.
And I had this chest cold, and I was dying.
Yeah.
Hot tea every day helped.
Yeah, I was doing the same thing, and I did a little massage yesterday, and it felt so much better because you're standing up the whole time
Yeah.
and walking around and trying to be excited and all
Yeah.
that stuff. So
Yeah.
713-785-1817. 713-785-1817. You guys do more than just long-term financing on rental properties. You'll finance all kinds of stuff.
Yeah,
All
we're
kinds
pretty
of
much
properties.
full service. A lot of the hard money lenders here in town strictly do hard money. Buying flips or hard money across the board. But we're a little bit different. I've always been a part of the conventional side as well. Hard money's what I've always loved because I like the control factor over it and the creativity. But yeah, so we do hard money for residential and commercial. We even do commercial properties on the hard money side. But then we'll do long-term financing for residential and commercial.
Okay.
Yeah, and we did our first SBA loan this year.
All I've ever heard is how terrible those things are. But
And I'm telling you, this deal was not. It was an easy deal. It was a great deal. It was a $2 million loan.
Yeah.
10% down. The loan had money for us for a hair salon. The money had money for interest payments, for equipment.
Wow.
I mean everything. It was a beautiful loan.
Huh. Cool.
Beautiful loan. But yeah, for the right business,
Yeah.
anytime it's a business type loan, they need to go to SBA. So yeah, we do some of those and mostly investors. The thing that a lot of people don't realize is a lot of mortgage companies, they say they work with investors, but that's only maybe 10 or 20% of their business.
Yeah.
And so we're the opposite.
Right.
We do loans for people as a primary residence, but it's really just a service for our existing clients. 80% of our business is all investment real estate.
Yep.
And so we're aligned with all the different banks and lenders that are investor friendly. I mean, we get deals sent to us from other mortgage brokers because they don't know what to do with some of these deals.
Yeah.
They're kind of one-trick ponies. They're built for long-term 30-year conventional mortgages, and if it doesn't fit that Fannie Mae standard, they don't know where to go a lot of times.
Yeah, they just assume it's a homestead, right?
Yeah.
I mean, that's and what's interesting too is it's kind of like insurance companies the same way. They're like, oh yeah, we'll insure your rental properties, and you get the quote back, and I'm like, not for that, you won't. Well, we'll do it for that, right? And
Yeah.
it's like, nah, I need to find the investor friendly. A lot of people think investor friendly means cheap, and I'm like, that's not the case.
Yeah.
Investor friendly means they can actually produce, right? They can actually do it.
Yeah, and they understand it.
Yeah, they understand the business.
Yeah, because it's a different model. And even realtors don't.
Oh no, most realtors don't understand investment grade real estate.
They don't at all. They look at primary residences. That's their bread and butter. And then when they have an investor, they're like, oh, I got this investor, but they don't understand what they're looking for. And it's a different ball of wax.
Yeah, there's one of the things we're talking about when we get into our new space is possibly inviting realtors in and training realtors how to work with investors, because that is a big deal. And a lot of investors spend an inordinate amount of time trying to train a realtor, and they get frustrated and then it just doesn't work. I mean, there's a way to do it, and there's a way, like anything, there's a way not to do it, right?
It's a good idea, because we get a lot of play on our Facebook page with realtors that are commenting or interested, and a lot of them are interested in even getting into the business as doing flips, but they want to learn. A lot of them really want to learn that side of it, Some of them don't really care, but some of them really want to dial into that.
Yeah, we find that one of the biggest challenges on the teaching side is realtors, because it's almost like you gotta unteach them, certain things of retail real estate versus investment real estate. Right?
Yeah. I can imagine that would be tough, but it depends on the individual.
Oh, sure, yeah.
It's like we were talking earlier. Some people are teachable.
Yeah, some
people
are not.
Some people just don't. They're so set in their ways and stubborn. It's like I was telling you. Whenever I have a new employee, I don't care if they're the lowest paid or who they are. The first thing I tell them is, I tell every employee the same thing. Look, there is nothing set in stone here.
That's right. Yeah.
If you think you got a better way of doing something, I am all ears. I'm not guaranteeing we're going to do it.
Right.
But I am open to listening to it, and we've changed a lot of things from the admin person to the bookkeeper to whoever, because we have that openness. But some people are like, nope, this is the way we do it here.
That's right, yeah.
This is the way.
Well, and most business operators assume that because they own the business, they're better at running the business than their employees are. And I'm like, that's not how we run our place. I want to hire people better than me to run my business, because that works out much better for us in the end, right?
Yeah, that way you don't have to manage it.
Right. And if you got a better idea, bring it, right?
Yeah, I'm all ears. I always say that. That's the only way to be.
So how should they get in contact with you guys over there at Noble Mortgage?
Sure. Our website, of course, noblemoney.com, or they can call us at 713-680-8100, or in Dallas at 214-492-0100. And again, mention our 80% of ARV deal that we're doing on rentals now. Fantastic program.
I think I'm just going to tell everybody it's the Darel Daik deal.
Yeah.
You can only get it here.
Yeah.
Give these guys a call. That's it.
Yeah. We're excited. We haven't even closed one yet. I'm excited to close our first one.
So when did it come out? Like last couple of weeks?
Yeah, I don't know when exactly it came out. So I think it's been a few months, but we've been kind of looking at it to make sure it's going to stick,
Yeah.
You never know. They change things all the time.
Yeah, that's true. But man, that is so sweet. So for those of you folks that are acquiring real estate to rent, and most of those are what I like to call real estate investors. There's real estate, where it's two types of folks that listen to this radio show. Those folks that are real estate investors, and those who are business owners in real estate, which is a little bit different. Fixing and flipping, that sort of thing. This product is not great for them, right? It's not going to. It's still 70%.
Still 70% on a flip, yeah.
So 70% on a flip, and that's never going to change. I think a lot of people think like, oh, Jason, I can flip houses at 75 and 80%. No, you can't.
No.
Sorry. We have something called the 10-10-10 rule, and if you want to make 10% profit, there's a 10% cost to buy and a 10% cost to sell. Right there is 30%. So you're at 70% ARV. I mean, it doesn't work. So,
yeah. Well, the only time that does work, I saw it work, was in like 2012 when the market was appreciating so much that people were betting on that.
Yeah.
And that's risky, right?
Scary, yeah.
But people were betting on it and successfully betting, because by the time they got that property turned around 6, 8, 12 months later, if it was a large rehab in the Heights or Brooksmith, the property value had gone up.
Yeah.
Now that's risky. I would never advise that, obviously.
Well, where else I see that kind of model works is new investors or incompetent investors, and they'll go into a deal. A rehab that should take 2 months ends up taking a year.
Yeah.
And the property finally gets on the market. Well, it's appreciated so much they're able to get out of it and make a little bit of money, which is nice, but this ain't California, guys.
Yeah.
This is not how you do business the right way in Texas.
And that's what was happening in 2012, right?
Yep.
It enabled someone said this to me, and I thought it was brilliant. It was, in the market we're in right now, you can make a mistake and still make a profit.
That's right.
And that's not normal.
No.
And so I think a lot of people got used to that. Mm-hmm. And then now they're not here anymore.
Yeah, that's weird. Where did all these people go?
Yeah.
I was looking at some stats in Dallas. It's appreciated 55% since 2012.
Dallas is really, really hot right now.
It's insane.
But it's hard to find a deal as an investor, too. Investors are really having to look hard, long and hard to find deals, because, the job market is so good there that people buying as a primary residence are just absorbing all those homes.
Well, I'd argue there's plenty of deals up there if you know what you're doing,
Yeah.
right? So that's where, at some point in each one of these market cycles, there's a natural attrition that takes place. In a really hot market, the people who can source deals are the ones that stay in business long term. In a flat market, it's those people who can rehab efficiently, put it back on the market, contain their costs. And then in a falling market, it's those who can actually fund the deals, right?
Yeah.
I'm sure you saw that in 07 or 08, 09, where everyone's freaking out. Lines of credit are evaporating overnight. Nobody's in real estate. How do I sell this property? All that sort of stuff.
Yeah. Yeah. Money was tight then, right?
Yeah.
Because I got all these mortgage companies that went out of business, whether it was hard money companies, conventional lenders, banks. I mean, they had that mortgage implodometer for a while.
Yeah, that's right. I remember that.
That was online. You could see it.
Yeah, you could watch the banks implode overnight.
Yeah.
It was a lot of fun.
Yeah. It was an interesting time.
Yeah. Who is the FDIC taking over today?
Yeah.
Right. That was always they'd walk in, shut it down, and then there's the FDIC guy, the receivership, right? Banks under receivership.
Yep,
What do we do
all
now?
the banks and a ton of conventional lenders that were doing the subprime, and a lot of hard money lenders.
Yep.
Ton of hard money lenders. Matter of fact, the hard money lenders that are in business in Houston now, I think probably 80% of them weren't in business. They started their companies after the crash.
Yeah, yeah.
Because a lot of them went under.
Mm-hmm. And then it's a lot like real estate investors, right? I mean, the ones you look at some of these guys and you're like, man, they grew. They're huge now, right?
Yeah.
And then of course you wait for the next crash and all of a sudden disappear.
Yeah. Yeah. That's true, because a lot of companies that were bigger than I was in that market just vanished. Vanished overnight.
Yeah.
But they were just doing stupid deals, though.
Yeah, yeah. Well, to you and I, it's like, that's a crazy deal. Why would you do that? And somebody does it, and you're like, ooh, okay.
Yeah.
Hope that works out, or you got a lot of cash, buddy.
For a while there, I was looking at, there's this one company that was doing deals, and he was being super aggressive even during the crash, and I'm sitting there going, I'm second guessing myself. I'm like, is he smarter than I am?
Yeah. Am I doing something wrong?
Does he see something that I don't see? 6 months later, he's out of business. I'm like, nope, I was right.
Yeah. Yeah. He saw something all right. Well, he didn't see something all right, right? Like the end of the tunnel. So, yeah, it's amazing. Well, it goes back to one of the reasons we're teaching real estate right now is that will happen again.
Sure.
And the time to learn how to invest in real estate is not then, it's now.
Yeah.
So that you can recognize that time, be experienced and professional enough to say, the real estate market's on fire, everyone's running for the exits, it's okay to be buying right now.
Yeah.
I mean, think back a couple of years ago. How many houses would you have bought knowing what you know now back in 08?
Oh, I would have bought. At the time, I had my own business, obviously, and we were managing our own foreclosures because we had a lot more foreclosures than we normally do, which we hardly ever get any. So I was just a matter of managing our portfolio, focused on my business and selling our foreclosures. But knowing what I know now, I would have been buying big time.
You think you would have kept those foreclosures instead of selling them?
Well, the problem with foreclosures is normally you get the ones that you don't want to keep.
Oh, that's right. I remember that. Maybe we'll talk more about that at the beginning of next break.
You don't get those pretty. Everybody thinks, oh, you're a hard money lender. You get all these foreclosures.
Houses, right?
Yeah, you don't get those. You get the ones in the hood.
That's right. We get back from the break. We're going to talk more with Darel Daik of Noble Mortgage. This is Jason Bible, Right Path Real Estate.
Mike's off.
Oh, you don't get the
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
Ehlert Law helps wholesalers and real estate agents get deals closed. Seller has too many title defects, too many dead people hanging around, taxman wants a slice of your pie. We work with sellers and title companies to resolve those defects and get clear to close so you get paid. No one can guarantee success, but we'll do our best. Contact Ehlert Law at 346-231-1120. 346-231-1120. Paid for by Darel Ehlert, Principal Offices in Houston, not board certified by the Texas Board of Legal Specialization.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
Hey guys.
That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business
we're going to have to
repairing
move and then we're going to
or
build
selling
out.
you unnecessary
Here's the little
peer work.
secret we
But we
found.
are
If
in the
you do the
business of
build out
evaluating
before you
your
get your
foundation.
occupancy,
Our product is designed for house flippers,
reapply for the
landlords,
occupancy
or
certificate.
even owner-occupied
So
properties.
we just move, then we'll
Each
do,
of our files
because we're
is
not
reviewed
doing a lot
by
of
a
build out.
licensed engineer.
We're taking out really
Remember
for us
to
to
check
start doing events
before
there. We
every
need to take
repair.
2 walls out.
Call
The vendor room is gonna be-
702-3825.
you know the event that we do over at
702
down the street here at the West Side location?
Or you can reach us online.
The vendor
at
room is that big and the classroom is
foundationcheck.com.
that big.
That's
And it might even be a little bit bigger than
foundationcheck.com.
that. But that's so we need to take out 2 walls.
Okay.
And
1
then
minute,
the vendors
guys.
will
How
have
much
one
it's
side,
worth,
and
or
then
more
we'll
importantly,
and then you
what
walk
to do to
essentially
maximize your
across the
investment
hall
while mitigating risk.
from one side of the
This
building
is
to the other.
exactly why
and
we
that's where the
started Next
classroom
Gen
is.
Appraisal.
Okay.
So
Next
vendor
Gen
areas,
is a group of
you guys can
appraisers
all loud
specializing
rowdy
in
and we
investment
don't
real
have to
estate.
smack crap
We
on
understand
Yeah,
that
yeah.
investors aren't
Classes,
just looking
Yeah.
for a number
They
of
have a
what
nice
their property
space on
is
the
worth,
first floor
but
that
a
you can rent,
comprehensive
I think,
analysis
from,
of the market.
from
Give
that,
Next Gen a call
college.
at
Yeah.
713-346-9911.
As soon as you walk in on the right, it's like a classroom
or
setting
check
with
us
a big
out
TV.
online
And
at nextgenappraisal.com.
yeah, when we were there, they showed us a space.
Investor Loan Source is
How big is
Houston's
it? Do you
premier investor
30
loan
seconds.
company.
Yeah.
Our products and
I need
approval
about
process are unique in the
2,500,
Houston
3,000 square
marketplace.
feet for main
First of all, we loan based
Like for
on
your
the
3-day?
asset alone. That
For the
means
3-day,
no credit
for our
minimums,
regular
no
events,
income
all that.
requirements, and no reserve minimums.
Because the debate we're having
Second,
right now
we
is,
have short-term
I
loans
know
for
this is gonna
fix and
happen.
flips and several long-term
6
options
months
for
from
rental
now,
properties. Since
it ain't
we're
gonna be enough
asset-based
space.
lenders, everyone is approved.
Because
always
Check
the
out
case.
Investor
We
Loan
really
Source
haven't started
at
a lot of
ILS.cash.
big marketing
That's
yet. I'm going to start buying
ILS.cash.
radio spots of like 610 and 740.
This is
and all that
business.
stuff.
All right, I work at
just know it's gonna
610.
grow. Do you really?
All right. Yeah,
Oh, I
I do.
didn't
All
know.
right. Yeah, stand by, guys. Hot mics in 5, 4, 3, 2, 1.
Welcome back. Jason Bible, Right Path Real Estate. I'm here with Darel Daik of Noble Mortgage. And we're just talking about 80% loans. No big deal, right? Not like a game changer. I mean, you guys got more money to just put into deals, right? Or is it? I think it's a bit of a game changer.
I think it really is. I mean, it's all about leverage, right?
That's right, yeah.
Cash on cash return increases by, exponentially when you get another 5%.
Yeah, and the real attractive part is twofold for land, and this is just for landlords. One, you get more leverage. Two, you get, obviously, because you got more leverage, you can buy more houses, right?
Yeah. Yeah, you can take that money and invest it in something else. That's a big part of it.
So, one question I've been meaning to ask you, is there a big difference between, on an investor product, 15-year versus 30-year in interest rates?
Yeah, typically about a half a point.
Okay.
So it certainly helps, but it certainly damages your cash flow a lot.
Oh, yeah. Oh, big time.
But some people don't care. Some people want to do a 15, because they just want to pay it off.
Yep.
They don't need the cash flow.
Right.
And I get that.
Mm-hmm.
Some people want to build a cash flow model, and some people want to build an equity model.
Right.
It just depends on what you're going to do.
I've got a lot of friends of mine. There's really, you and I were chatting during one of the breaks where there's two pieces of this business. There's the real estate as an investment and real estate as an actual business, right? And I've got a lot of friends who are, pretty high wage earners, do real well, and they don't want to go into real estate full time. And they don't want to run it like a business. They just want some investment properties. And I tell them, like, look, get your little portfolio, get these 15-year loans, right? Wait 7, 8, 9 years, sell half the portfolio, pay off the other half, and you got a bunch of free and clear rentals.
Yeah.
If that's what they want to do, right?
Sure.
But I like the 15-year mortgage as an investment vehicle, like you said, really more of an equity play than a cash flow play.
Yeah. And I have a rental house that I have on I think it's a 15 or 20 year. Mm-hmm. I'm just, and I don't make any money on the house. It pays for itself, but I'm just trying to pay it down.
Yeah.
Because I don't really need the cash flow on that particular house. It's more of an area that's an appreciating area, and I'll tear it down and build some townhomes probably eventually.
So it's a nice side of town, I bet.
Yeah, it's over in off of like Southmore 288, but on the medical side, it's all brand new townhomes over there.
Oh, cool.
And so I've always just have college kids in there, and it's an older house. It's a cool house, but it's an old house. So eventually I'm subdividing it right now, actually.
Do you get a bunch of postcards, yellow letters, all that stuff from
all
investors?
the time.
Yeah. The little joke in our mastermind, everyone who's a landlord, we get all the marketing and then we scan it and put it onto our mastermind drive so everyone has examples of marketing.
That's good.
It's funny. So you guys out there that are, quote, our competitors, feel free to keep sending me your marketing because I'm just sharing it with everybody in our group.
Yeah, I get those letters all the time. Sometimes they're handwritten. Sometimes they're,
And somebody keeps telling me, Jason, what's better? A postcard or a yellow letter? I'm like, you know what? I've never gotten a letter or postcard that's been so compelling that I'm like, oh, you know what? Those houses we're making so much money on, you're right. I ought to sell them to an investor, right?
Yeah. I would say I open the handwritten ones and actually read them. If I get a postcard, boom.
Yeah.
But if I get a handwritten letter, I'm like, who's this from?
Yeah.
Because I don't know, maybe something I need to.
Right. Oh, sure. Yeah.
Then I'll actually open it.
Yep.
And then I open it, and I'm like, okay, it's a handwritten letter. So then I'm like,
20 seconds, guys.
Yeah. All right. Where can they contact you, and when's your next event?
Sure. Our next event tomorrow morning at Canopy, Basics and Breakfast. I'll talk financing, and my friend David Nettles will talk tax protests. And we can be reached at 713-680-8100.
All right. Darel Daik, Noble Mortgage, thanks for coming on the show.
Thank you, my friend.
This is Jason Bible, Right Path Real Estate.
All right, fellas, have a good day.
All right, thanks. Bye.
Bye.
I like that. Good show.
You've been listening to Right